In this lesson, I'll be sharing with you exactly how you can trade the cryptocurrency, the pattern, the formation you needed, the time frame of analysis, and the time frame of execution, and how you can execute your trading order. So number one checklist, it is important for you to determine your trend of the market. And when we talk about trend, we are talking about the direction of the market. You have to determine whether it is a buying trend or a selling trend or a ranging market. Anytime you open your chart, one of this scenario must be playing out. So it is either the price is buying, it is selling, or it is ranging. Now for us to determine this, if you look at this over time, this particular price scenario, price has been selling to the downside. So we have our high here, and price keep moving from that zone. After that particular zone, we have this low. This is a 4-hour time frame, and then we have this particular high. Then we have this new low, and then price pull back to give us this particular high again, and then this particular lower low. So what does this imply? This is our high. So here is our lower high. That is where the movement of this price begins. And after that, we have a lower low, a lower high, a lower low, a lower high, and a lower low. So this is to enable us determine the trend of the market. You can as well have your trend line to do this for you. So if you are using your trend line, you can put your trend line this way. So this is a downtrend. So at this point, price break out of this trend line. Not that alone, but again we see price break out of this structural point. So this structural point, price break out of it, and this point give us a break of structure. So immediately we have this break of structure, price move to the upside. And one of the way for us to know institutional movement is how price move out of that particular zone. So you can see the strength, the nature of the bullish candle that were formed. A retail trader cannot move price this way on a higher time frame. So having established that we are in an uptrend, because this bearish structure has been compromised, it has been broken, now we are in an uptrend. So however, when we were in this downtrend, from this side, you have determined your trend. After determining your trend, what do you supposed to do? You are meant to mark out your point of interest. What is your point of interest? Your point of interest can be your resistance zone. Okay, here where price begin is a point of interest. So you are expecting that whenever price pull back to that zone, you'll be making a decision of either to buy or decision to sell. Point of interest number 2, it can be a fair value gap. So in this scenario, here we have a fair value gap, which is an improper price action. Another point of interest can be a smart money cube. A smart money cube is an opposite candle that is found in a series of similar candles. Here, price has been bearish candle, bearish candle, bearish candle, then suddenly a bullish candle appears in between. So this is a smart money cube. And here we now have a continuation of bearish candle. So here we have a fair value gap, which coincide after the fair value gap was a smart money cube. So I am going to mark these two together. So what is the implication of this? The implication of this is that now that price is bearish, I'm going to wait for price to pull back into this zone, either the smart money cube or fill this imbalance and then continue to the downside. Another thing I am observing, we are still marking now point of interest in this sell zone, is the fact that here price make a pullback. Price pull back here. This is our structural point that we marked earlier. So here is an order block. Here again we have a bearish order block. So having marked out this point of interest, we want to see price pull into this zone in order for us to have an entry. And let's look at what happened. Price moved from here and came into this particular zone, which is the first movement. So when price gets into this order block, let's see what happened. That is where we have a break of structure. So let's look at our 1 hour time frame. So this is the zone, and here is what happened. Look at this on a 1 hour time frame. The price pulled back into this particular order block that we marked from a 4 hour. When price pulled back into this order block, pay attention to this. You realize that we have this top and this top, which gave us an equal high on our commodity channel index. But when you look at the main chart, here is giving us a higher high, while the indicator window is giving us an equal high. So this is a divergence which signal a reversal. So if you are to trade this on a 1 hour time frame, you should be looking for a candlestick formation for you to sell. So having gotten this candlestick formation and price is already at this zone and has given you a signal, and price has given you a signal from that zone, what do we need to do? All you need to do is for you to get an entry confirmation. At the close of that candle, you have a divergence, you now sell to the downside. And if you look at that critically, you see that this price now sold for 1 hour, 2 hours, it pulled back a little and sold up to this point. That is one way to make your entry. On your 15 minutes, let's look at how the price plays out on a 15-minute time frame. Okay, this is the movement on a 15-minute time frame. On 15-minute time frame as well, we have a divergence. And I always say that one of the ways to identify the end of a pullback is always looking forward for a divergence. So look at this zone. Immediately price pull into your point of interest, which is this zone. What do you want to see? You want to see a bearish signal because the trend is a downtrend, and you will be looking for only opportunity to sell in a downtrend. So immediately price pull to your point of interest of the downtrend, you will need a signal. For the fact that price come into the zone alone, you don't need to sell, you need a signal. And one of those signals first is the fact that we have a divergence. And after that divergence, we saw this bearish candle coming down in that zone, followed by this particular bearish candle. And if you are using a trend line, price break out of your trend line. But however, if you are using a candlestick pattern, immediately after you have this series of candles here, that is your sell entry. Your stop loss is here. This is how it works, and you would have been in this sell trade. Now another thing to take note of is, look at this. Even on this lower time frame, price break structure. This structural point was broken. Then price pull back a little and then continue to the downside. So you can trade this break of structure and this entry to the downside. So that is how to find your entry on that particular time frame. Now let's proceed. After that particular movement, this is where we have that little sell entry. Now price push above it, and when price does that, we realize that here now the structure has been compromised and structure was broken here. So when price take away this lower high, we already know that we are no longer in a downtrend but in an uptrend. So we'll be waiting for price to pull back to our point of interest in order for us to make a buy entry. But however, for price to come for us to make this buy entry, since it has broken a structure, we will need price to come back to a point of interest in this buy zone. And how do we identify point of interest in this buy zone? The same way price went up, we begin to look for our point of interest. First of its kind is that we have here a support zone. So this support zone double as our order block, because here we have a bearish candle and then this bullish candle. So this support is our support zone, it is our order block zone. The next thing we saw was that there is a fair value gap, which is an imbalance in this place. So we have a support zone, and then here we have a fair value gap in this zone. And this is happening because here at this point we already have a break of structure. So price is no longer bearish. It has become a bullish market for breaking the structure. And because structure was broken, we now mark our point of interest for a buy trade. But please pay attention to this. In order for us to buy, price will definitely still pull back into this point of interest that we have marked, so we can find a buy trade because structure has been broken. Now for this pullback to happen, it will still happen from our point of interest, and that is why we already have a point of interest being marked out. And the point of interest we marked earlier is our fair value gap. Fair value gap here combined with a smart money cube. And so let's focus on this now. So let's look at when price pulled back into that zone on a H1 time frame. So look at it. Here is that zone, and then price move all the way from here, pull back into that zone. So this is price in that zone. So what do we want to see? First, we saw this particular candlestick formation. This is a 1 hour time frame. Or if you want to make your entry on the 1 hour time frame, we'll be using solely candlestick formation. So we see that this is a bearish signal. Price was playing around, and then we have this pull down. All of these were price playing around. So after this particular movement, you see that price push up again to this zone. And after this, you need to understand when you want to trade 1 hour candlestick behavior. You can see the strength of buyers, and it is around your zone of point of interest. So there is this weakness, dojis formation, then suddenly you have this bearish candle. So after the close of this bearish candle is your sell entry here, your stop loss above that high. And of course, you can see what happened. So it looks like there is a liquidity, internal liquidity here, that was taken to this downside. And after that, price went up to mitigate this, and then price fall to the downside. So immediately you find that entry. Let's look at 15 minutes and see how that entry came about. Beautiful. Look at 15 minutes. On a 15-minute time frame, we are having more or less like a divergence. Though it is not a divergence, but this is as well a chart pattern formation. So you can use this to determine your entry. So you can see this bearish candle close out of that pattern, and you know it is your point of interest. Then what next? You wait for your CCI to close below the level of 50, and you are in that trade to the downside. So this is how exactly you can and will always take advantage of this particular strategy. So you now see that this sell need to happen even though price has become bullish. This sell need to happen in order for you to now buy in the new direction of the trend. And the trend did not just happen, it needs to happen inside a point of interest. So now that price has sold and has pulled back here, and you are already in an uptrend. Remember, we have our point of interest marked out already, a fair value gap here, and our order block which double as our support and resistance. And now price has pulled back inside that zone. So let's look at our 1 hour and see when this price pulled back. Beautifully well, you can see this price pull back into this zone. Remember, we only trade two types of candlestick pattern. We want to see either a bullish engulfing or a bullish pin bar. And in this zone, look at what happened. We have this first rejection. Look at this first rejection of a pin bar candle formation. This first rejection of a pin bar, then followed by a second rejection of a hammer. And all of this gave us a beautiful entry from our point of interest inside the fair value gap on a 4-hour time frame. You can see that inside this 4-hour time frame on a 1 hour, price gave us that beautiful entry. And then you have your buy entry here, and your stop loss is below. So this is exactly how you can take advantage of this strategy. This is how you can trade the crypto market, and this strategy works beautifully well. It works beautifully well. And after that movement, look at what happened. If you are to continue with this on a 1 hour time frame, This is your higher high. This is a new low now. This is a higher low. This is a higher high. And what happened? Price pulled back into this particular zone. And again, when that price pull back, you have a bullish candle inside of that zone. You buy again, and then price pull to the upside. I don't want this video to be too long. Please watch this, understand the concept, and see exactly how this plays out. And you can take advantage of this at any time to make money out of the financial market. I believe you have found value. I'll be making a subsequent video to explain this more and in a more simpler term. Thank you for watching, and please do not forget to give this video a like, share, subscribe, turn on the notification bell so you'll be the first to get notified when we upload our next video.